All right, let's say on all things creativity and markets. 2022 was a rough year for stocks, to say the very least, with inflation and recession still on investors' minds. As we begin the first trading week of the new year, several 2022 headwinds to be pulled back into focus in 2023 as economic data picks up in this holiday shortened trading session. Let's bring in our very own markets reporter, Alexandra Semenova, with the look ahead. And it is going to be a busy week, shortened trading week, but lots going on.
It is, guys. Well, first of all, Happy New Year. Investors are getting a clean slate, but not necessarily a fresh start for the new year. Many of last year's troubles are likely to persist into 2023. Still high inflation, persistently higher interest rates, and of course, the resulting possibility of a recession. We see those pressures again with stocks this morning, and traders will be further reminded of them once economic data picks back up this week. The two headline events of the week are the release of the Fed minutes tomorrow afternoon and, of course, the all-important December jobs report Friday morning. Investors will pore over the Fed minutes tomorrow for clues on what the central bank will do when it meets again at the end of the month and is expected to deliver another rate hike February 1st at the conclusion of its discussions. And those minutes will also offer some insight into the Fed's slower but higher thinking. As we saw last month, officials are now talking about downshifting rate hikes. We're still expected to get at least another 75 basis points worth of hikes. They're just going to come in smaller increments. And then the jobs report will be really important on Friday. The labor market has so far pretty much breezed through monetary tightening last year. We've been getting continuously high readings. We could get another high reading on Friday, with economists expecting a reading of 200,000 jobs for December. And this could be an area of concern for investors because the labor market's tightness has kept inflation quite sticky. We've also got more labor market data from the job openings and labor turnover survey. We'll get ADP's private payrolls reports, weekly initial jobless claims, and the Challenger job cuts report also due out. Earnings season is in a quiet period, but we could start getting some warnings from companies on what they're expecting. Analysts have warned that we could start getting, some bad news trickle in.
Fun stuff. I'm curious for a vibe check also. Like, you read a lot of notes, you talk to a lot of people, we talk to a lot of people. It definitely seems like there is a very cautious, sort of downbeat vibe going into this year. Is that your impression from what you're seeing and hearing?
Exactly, Julie. Many are saying that 2023 will unfortunately be just a repeat of 2022. Again, we might get some improvements in individual readings like CPI and the jobs report. However, until we get indication from the Fed that they're ready to pause rate hikes, to stop hiking, to even cut rates, we won't get any meaningful change in sentiment around stocks. The outlook is pretty negative for the most part. People see stocks going nowhere this year, or at least, just a little bit higher. But it's not looking much better for 2023.
Dan Loeb tweeting LFG, right, over the weekend?
Yeah.
He's fired up. He's ready to rock and roll.
Are you serious?
Yeah. All right, ready to rock and roll.
Okay. All right. Thanks, Alex.
Thanks, guys.
Appreciate it.